What's going on, everybody? Welcome to the Stock Market Brief Show. Today was a holiday with no real major U.S. economic data or Fed speakers due to Veterans Day. Now, I want to welcome you back to today's Stock Market Brief Show. This is where we navigate the financial markets through the lens of technical and intermarket analysis. Today, we are diving into a day that was dominated by what people are calling the Trump trade. Now, this could be because the market's reacting to the likelihood of a Republican-controlled Congress. Now, before you get all crazy, whether you like Trump, you don't like Trump, don't be this guy right over here, where when we talked about the possibilities for the market going on a monster run, he said no one knows what the election will bring to the markets, but a Trump boost, LOL, done subscribing to another YouTube yo-yo. Well, unfortunately for him, if he wasn't prepared, it's not looking too good. We got a lot to talk about, so let's get into today's show. All right, everybody, welcome back to the show. I want to first start off saying that tomorrow we have ourselves a lot of Fed speakers coming out. We got Waller, Barkin, Kashkari, Harker, just to name the few, and then Barkin again, apparently. So we have a lot of people coming out here from the Fed, likely to drive some volatility in the markets. And then the day after that is when we get our inflation data. That's going to be a big report to determine whether or not the Federal Reserve Chairman Jerome Powell is doing the right thing by cutting rates. As far as equities go today, we did see some modest gains, but as we previously mentioned, treasuries were closed for the holiday Veterans Day. Crude oil moved lower. The dollar absolutely surged. We'll get back into this stuff in a little bit here, but let's take a look at some of the major developments that took place in today's market. So as we previously stated, the big story was the so-called Trump trade, and this could be because with the Republicans are inching closer to the majority in the House and also likely setting up for a red sweep in Congress. So is this investors betting on policies for a Trump administration that could potentially stoke inflation, like tax cuts, increased spending, regulatory rollbacks? Well, these major developments alone did drive the dollar up to multi-month highs today. If we take a look at some of the geopolitical tensions going on, we did have news in that space and reports that Hezbollah has engaged in ongoing negotiations to halt the Middle East conflict, and Israel expressed optimism for a resolution based on the framework they're calling the American document. And that news did help to ease some of the recent pressure that we've been seeing on crude oil prices, as we've seen them inch lower 3% on today's trading session. Now, this could be done because of those geopolitical tensions, or the fact that the dollar saw a large spike could be what drove commodities, specifically commodities price in dollars, a little bit lower. As far as the fixed income market goes, through treasuries, they were close today, but the T-note futures did trade a little bit lower. If we take a look at TLT, we traded in and around that quarter to date expected move. And if you take a look at the weekly timeframes, last week we did have an outside candle, hammer candle, and we're trading inside of that currently. So this would be kind of interesting as the market sold off pretty significantly. Is TLT setting up for a potential bounce, which would mean that we'd probably alleviate some of the recent move in the 10-year yield that we've been seeing. As far as the 10-year treasury goes, long-term treasury yield goes with the SPX correlation, we're looking at a 1-day and 30-day correlation, and you can see they're above this line right here. So we are currently seeing a positive correlation between the S&P 500 and long-term treasury yields. And this typically is a negative correlated chart, but in recent trade, we've been positively correlated. And you can go back over here and kind of see through the history. Here's the 10-year yield, here's the dollar, and here's SPX. And interestingly enough, SPX found its bottom and started rallying when the dollar and the 10-year yield, they both started selling off. But in recent trades since October, you really start to see that dollar boost higher, the 10-year yield rip higher, and the S&P 500 is following suit as well. So it just comes to the question as, which one's line, or is this the new correlative state moving forward? I think one of these would be personally line, and we'll talk more about the S&P 500 and how we're coming into a very important level right now. Let's hop into the performance of the markets. Overall today, the S&P 500 finished up 10 basis points, so relatively flat. The big mover was in small caps. It was up 1.53%, so I do want to revisit that towards the end of this episode. As far as the 11 sectors that make up the S&P 500, consumer discretionary led the way, financials and industrials, led by basically Tesla, once again, flying higher. And then towards the bottom of the list, we had tech, healthcare, and real estate take a little bit of a hit there. If we take a look at pairings like the USD JPY, we did see that go up subtly. And the thought process here is that there's a little bit of pressure on the yen due to the Bank of Japan's cautious stance on rates. The Euro USD did slip to a 6-month low, and this could be concerns over the potential tariffs on the Eurozone from the Trump administration. Bitcoin also saw a massive boost. Now, we had our buy signal, buy trigger occur on October the 16th. And since that point right here at about 65,000, a little bit less, we've seen the market move near 90,000 in a very short period of time. You can see that here on the daily chart. We broke out of this long consolidation and absolutely exploded higher. It does look like it wants to go test into that 100,000. I don't know what the path is going to look like to get there, but I'd be very cautious if you're entering in new positions after a very aggressive move. It's not just Bitcoin. You're seeing a big move in Ethereum break from this kind of inverse head and shoulders pattern that we had discussed on prior episodes. Solana also making a big break from its recent consolidation. And then various equities such as HUT Miner or HUT, crypto-related equities on October 16th when we got that buy trigger. We're seeing massive moves up almost 100%, or if so, over 100% there. Mara also saw some very big gains today, up 30%, breaking out of its tight little consolidation. So be very careful chasing up into these areas. These look like they have more room to run, but you want to see some consolidations to make sure that you are entering in at a better time to not get really chopped up in the volatility, right? So even if it were to come back down here, that's a big drop. And if it were to consolidate and come back up, it could set up where we can have a lower risk, and or it goes up a little bit higher and consolidates and then offers up better risk to reward on something like that. So that's kind of the things that I watch for. But you do you. RIOT, Riot is another one. I mean, you can look at CLSK, you can look at BTBT, IREN, Cores, all these different names, but they're seeing massive moves. Let's go ahead and take a look at some of the market conditions now. Market conditions are currently bullish. We are above the gamma flip line over here, and you can see that price did get pinned in and around this level. This was about 58.50 where price got kind of caught up in. And now I'm pointing this out because we're at 6,000, and 6,000 now is the call wall as it stands. You can see that here. So when we get above this level, it's potential that we come right back in. We saw that today, and get pinned in and around these levels until we start to see some of this gamma expire, which happens to be on Friday of this week. So we're positive gamma territory, albeit we're kind of extended. So I'd look for, opportunities to buy the dip. If price were to come all the way back down here, that would still be a pretty bullish look. It would be just a back test of this prior price action. So don't be scared if we start seeing price action fall in the near future, or just chop around sideways in and around this to create a bullish consolidation. Now, I want to be pretty cautious here if we start kind of breaking down from this 6,000 and holding down underneath there. Because if I do look at CTA positioning, you can see that this is curling down here, which leads me to believe that if the S&P 500 does continue to fall, it's going to trigger more momentum sellers, CTAs, to start selling off a little bit more as well. As far as the 5-day moving average goes, we're above inclining 5-day moving averages in multiple assets. We got the SPYs, the Qs, the IWM, we got semiconductors, biotech, and DIA. The only one not above it is the semiconductors, but it is still rising. So when price is below it and we have a rising 5-day moving average, it presents the yellow color, which represents caution. So we can potentially reclaim that and go see a move higher. But right now it's telling us to be cautionary given that context. Now, another thing that I want to talk about here around this 6,000 is that JPM collar, because we are approaching that. And as we approach a JPM collar, it's a large position. And these large positions, they have to hedge off risk, which could cap or limit upside. Now, the thought here, though, is kind of interesting. This is the original one that I kind of pulled. This I pulled online, but I found the same exact order on Thinkorswim, and it was at this exact same time. And I saw the upside at about 60.20. However, I am seeing this one float around too, which was done later on 12 for the same expiration out here to 12/31. And you can see that the call exposure brings us up to and around 60.55. So just in around this area of 6,000 to 6,050 can be limited upside. This is what I'm trying to say due to the JPM collar and the current gamma exposure. I do see traders reaching out to 6,100, but just be aware that this could be some choppy price action to digest this current move. And we just need to be careful in and around these higher levels as much as, the FOMO is probably driving in anybody that has missed this move. Let's look at some of the expected moves. Going into tomorrow, we have a daily expected move at about 601.75, 595.75 down there beneath us. And then we have the VIX daily implied moves that creates this somewhat of a zone. Now, if price were to come down into this range, just be aware that we have that presidential VWAP over here that we have not tested really. And there would be a level of interest if price were to drive into these areas, maybe make a U-turn and, shake some people out and move from there. Other than that, that would still be above a rising 5-day moving average. And we have the lower weekly expected move at 589.82. The upper weekly expected move is at 606.56. I want to dive into, I don't have the chart of the IWM, unfortunately, but I wanted to talk about that. IWM is near the quarterly expected move, not too far from it. And my thought process is to be very careful with small caps, including the IWM, because of its recent move and getting outside or nearly the outside. So my thought is if IWM does come into the weekly expected move, which is outside of the quarterly expected move, and that is at 243.96, if it does come in and around those levels or slightly above, I'd be looking to take profits in names that have a strong correlation to that, and or just put on a small short position to hedge off some of the risk. Let's look at the S&P 500, and I want to start with looking at ES. This is the daily chart of ES, and I wanted to call out that we've been seeing a massive move, and I want you to pay attention to these candles. They're very authoritative in nature. You get a large green bullish candle, and then what do you notice? The range of this candle gets a little bit smaller. The range of this candle is getting a little bit smaller. The range of this candle is getting smaller. And even the bodies went from big and authoritative to still pretty authoritative to a little bit smaller to very small. So what I'm seeing here is the momentum, right? Price expanded, and now we're starting to see price contract and, pause out. Now, this doesn't mean it has to resolve to the downside, but it's likely to resolve to the downside when you start seeing these type of patterns. Not that it means it can't break up to the upside, but likely the higher probability of it is to happen in times like this versus in a time after a big authoritative candle and authoritative candle. It's likely when momentum starts to stall out that we can see the chop or the pullbacks. So if we start breaking underneath the daily ES candle, perhaps that does shoot us a little bit lower, and we can potentially come back into and around these levels down here. So that's what I'd be paying attention to. Other than that, if we just kind of chop around, it could be a bullish consolidation, and we could break out to go higher. And you don't want to rule that one out either. If we take a look at the SPY, you can see here, this is the monthly expected move, just under that 598 level. Today, we did tag in over 600. So congratulations, a new record over there too as well. But remember, it is November 11th, and we are already trading outside of the monthly expected move. So to see this digest in the very near future, completely and utterly possible. The last thing I want to close off with is if you don't know about the swing trading community, you can sign up through Patreon and sync up your Discord. I give all types of benefits. And I want to just let people know I haven't been posting too many trade ideas as of recently, other than just the weekly expected moves, daily expected moves, and some trade setups. But there's a list of names here that I want you to watch out for. I'm going to be posting a video going over these names on the list because they are setting up in various different ways. And I wanted to get that out there. So if you want to see that video, it should be out later tonight. That's all I got for you. Hope it helps. See you later.